training 16, trading necklines. This is Matt Shaw, Chief Analyst, Knightsbridge Trading Academy. Alright, so this is trading the necklines. Now, I'm sure you would have heard of head and shoulders pattern and reverse head and shoulders. Well, what do we see on shoulders? We see a neck. Alright. Now you can see necklines or descending necklines or ascending necklines. Now, very often, okay, don't have to really see a particular head and shoulders. Now, what you see a classic head and shoulders is here. I've got this example up on Aussie dollar. So pretty much you've got the head here on a candle chart. You've got the shoulders here. So you've got weighted shoulders. You've got the market made top, come back off, rallied up, sold off, rallied up slightly again. So we've got this period activity here of up and down and then back up, and then made that V sort of pyramid shape, and then not a clean one, but still quite vivid, back off and sold and reversed back up slightly, and that sort of made another shoulder. So you've got the head and shoulders here. Now in amongst that you've got a neck. Now what that neck is, you just completely draw a line through the shoulders, and that's pretty much there until it sort of adds up right there. And that's pretty much where we are with regards to the neck. So the neck is where then really the market extends beyond and creates the head. Really, so you've got a head on top of the neck. That's all it is. Like sort of, I think Dr. Kerrang or Clunge or whatever his name was in the Ninja Mutant Turtles series. As a kid, it's kind of what this looks like. Kerrang, that's correct, yeah. So you've got the shoulders sort of even just under, right there, just under the neck. And obviously then you spread up and you've got the head, big ugly head on top, neck, and then shoulders just below. It's pretty much it. Now as you can see here, why it's good to trade these, you can see on this particular example on Aussie dollar, the market came back up, touched the neckline again pretty much perfectly for the moving averages as well. And as you can see, the moving averages are crossing down each other to the downside, crossing down lower. It was a bearish signal anyway. And of course, what do we look for? 1 to 2 candles, pretty much there or thereabouts. Several other factors specifically, but then we see a sell-off just down below the neckline, and then continues on lower, quite a way lower, over 400 pips lower. This market from this neckline sold off, to 87 from really 93, so nearly 600, over 600 pips sell off. And that was just, it was quite a way. It was mid-November to mid-January, but 600 pips in 2 months, that's not bad. If you just held the position, that's 300 pips a month. That's 10 pips a day without even doing anything, just leaving the trades run. So not bad at all, really. There is another example. Let's have a look. I think I spotted a nice one on here as well. Again, another neckline. You don't have to see head and shoulders or reverse head and shoulders. You can simply see the baseline. And I like to call this the neck as well, because it really is, these are the heads, I call them. They're tittering on support, because what do you rest your support on? You rest your neck on shoulders, yeah? So pretty much this is the head. You could say the shoulders are just below, or we can't see them because it's not head and shoulders, but this is the neckline here. Is base, and as soon as the base is broke, pretty much along with the moving averages, market just carries on selling. So any break here, or any time you're convinced, but it has to be within a certain length of time, which we go through in the masterclass. You can't just wait 2, 3, 4 hours. It has to be within a certain time. The markets break here, we have a certain confirmation at some point regarding the elements below, and then the market continues to sell off again. Again, this was a 77 break, much shorter time wave this time, second week of January to early March. 6-7 weeks, and that sold off 78 down to 70. It's nearly 800 pips in 6 weeks. Unbelievable breaks you can get with these. Unbelievable. Now the next one, I'll just get a Kiwi CAD. Oh, right there, just below. Now, what I like about Kiwi CAD, let me just find the perfect example. Again, I'm liking this pair more and more of late. A lot of good trading opportunities with this. Now, several necklines on this. I mean, there's so many opportunities you could pick looking back and going forward as well. There's one coming up, which I'll go through in a second. Again, very similar, very nearly appears a head and shoulders, but again, neckline through, right through the median there, going with the higher highs that was making, and then obviously the market came off, tried to hold above this level, bounce back off here, and sort of a neckline, sort of a head made here, some kind of shoulder activity. It's not specific, it's not a perfect head and shoulders, but it's something. It's a head right there through the neckline. The market sold off massively again over 2 to 3 months. Coming forward closer to present day, and again, kind of a nice example here. Again, not well, it's sort of the market sold off, came back a little bit, made this ugly head, not really a perfect shoulder on the right side, but again, drawing this line through the mean average of these prices, made that ugly head higher, market comes down below the moving averages, breaks that neckline and continues lower. And again, continues a lot lower to ultimate lows that we've just seen over the coming weeks. And this is why I like this pair, because I do see more selling from this lower high that it's just made. We've had a nice huge sell down to 87. We've picked back up towards that 89 levels where we are now, 89.50, and now I see markets heading back lower again. Because all this has done is created sort of a reverse head and shoulders. Because what we've got now is the market selling off here, rising back up a little bit, creating a shoulder and selling off. It's made a bottom, a head, and now come up, rallied, and now sold back off from that lower high recently, middle of September. So this perfectly matches up with this. It's two shoulders upside down, the head dangling here upside down. So we've got shoulder, shoulder, head, reverse head and shoulders, pop, pop, slight consolidation, then this is sloping. So we've got, this is what is meant by when sometimes you get a sloping neckline. So we've got a reverse head and shoulders here, but also on the recent price action, we've got a sloping neckline right here on this activity, because what has happened on this previous attempt at a high, market sold straight back off, came back again, failed to beat this level, and sold back off again. So it's a sloping neckline, and it's a reverse head and shoulders, and now it's coming back off again. Very simple to see. This is why I like it. I've used it in the previous example, used this FX pair in the previous video, but it's looking very good. I'm already short this market personally. I'm going to throw it on the demo right now, but as you can see here, again, perfectly set. I've drawn this line through before I started the audio, just to show where effectively the neckline is. We've got the shoulders here, so I've drawn the neck just under the shoulders, because now we're upside down. The head here, prices attempt to beat this previous shoulder, can't. We're heading lower, and the market is on a sloping neckline. And again, sloping necklines after you've seen a head and shoulders is lovely. And times like this, you've just got to sell and just bide your time. Whether it takes an hour, a day, or a week, you will get what you want 8 to 9 times out of 10 with trades like this once you've done the proper analysis. I've checked New Zealand CAD, no great data out in the next 48 hours with New Zealand dollar. Sorry, with the New Zealand dollar, yeah. And tomorrow there's some Canadian data which I'll keep an eye on, so we'll just see. Other than that, we'll just carry on selling this market. All right, thank you very much. On to the next video.